Hello, Mr. Barthels from Ethenea Investment. Could you explain a bit about your general investment policy?
Yes, of course, I can do that quite easily. I mean, Ethenea is actually, we have 3 funds that we are managing. All 3 funds are mixed asset funds. We have like a balanced approach. What makes us different from other companies very often is that we focus on volatility. We do like explicit volatility targeting by trying to maintain volatility beyond or below a certain threshold. Very often that is for the main fund that we are displaying, the balanced approach for the Etna Active, which has like up to 50% or 49 to be exact, so roughly 50% equity exposure. There we are saying we want to maintain volatility below 6% volatility per annum in that particular fund. For the defensive one, which has a maximum of 10% equity exposure, there we try to maintain volatility below 4%. And then we have like the active, the most aggressive mandate that we have, while aggressive is typically very often in this case probably like a misused name, but it's most dynamic. The Etna Dynamic has a volatility target of maximum of 10% with a maximum equity exposure of 70%. And at this stage in time, the last years back, we've always been well below those targets actively. At this stage in time, we, for instance, the Etna Defensive has a volatility of roughly barely above 2%. The defensive, the active has a volatility of 3.8, 3.9%. And even the dynamic one has a volatility still below 5% at this stage in time. So we will below target, but that's really our approach. We want to be very, very conservative, very risk averse, and still trying to maintain basically a good return, an adequate return for the investors that have given the money to us.
And when you speak about equity, do you invest based on top-down or bottom-up approach?
It's really a mixture of both. I mean, first and foremost, basically, I mean, I know that sounds like I'm trying to evade the question, but it's not really. First of all, we do like a top-down approach. We're doing like a macro-based approach. So we are sitting together in our investment committee, discussing all the global markets as we see them, as they unfold. Our chief economist basically is leading through the various countries and jurisdictions. And then based upon that one, we take a view on the various segments of the investable markets that we are looking at. So the equity market, bond world, so interest rates, etc. And based upon that one, basically, then we actually delve into the matter and try to pick the companies or the sectors, first and foremost, basically, that we think would be the best performer given our certain outlook, basically, for the next 3 to 4 weeks.